There's a long way to fall when you're at record prices, right?
And we tend to experience those that fall down seems like it happens awful quickly relative to what sometimes might seem like a slower climb up. And I think you can look at the corn and soybean side of this equation and begin to see much lower prices that we didn't anticipate, perhaps when we were uh, thinking, I don't know, back in planting time that we would be this low. So it doesn't take much to put a lot of pressure on. And cattle's been in a wonderful place. Um, Drought certainly got us here to these record prices, but it doesn't. If you look back at where we went in 2015, it didn't take long for some correction relative to the drought of 2012 that we had. And I'm not saying we're at the same place in this cattle cycle, but we want to watch what that downside risk looks like.
I would also assume, and we don't have to preach too much, but I mean, having some risk management in place, and this is a good reminder why we have that conversation so often.
So let's not forget, prior to 2020, we probably didn't use much LRP in the cattle industry. It has become very commonplace for folks to use LRP um, today. So it's amazing how quickly that's changed. Risk management, again, I say all the time, singles and doubles, not home runs. If I was good at hitting home runs, perhaps I would take more risk. But for a lot of folks, this is all about long-term business profitability. And so maybe I'm willing to give up some of the very upper end trying to protect the downside. And when you see the kind of tools that we've developed over the last several years, like LRP, it gives us an opportunity to lay off that downside risk without giving up the opportunity for higher market prices if that's what unfolds when we're ready to sell. So much better tools than I think we would have had in the toolbox even 5 years ago. And I think those are the things that producers have to continue to look at as they think about their own operation.